rupees 12,000 years for 18 years, how much will it be? My future value. Now you want to find future values. Now one thing is missing. Tapan, can you tell me what is this missing? So these are the 5 things, right? So you have future value you want to find out. Rupees 12,000 every year. Rate is missing. Yeah, Ryan did it. Okay, awesome. Dinesh, Royal. Yeah, all people are getting very smart, right? Yeah. Okay. Okay. Yes, Samsung, please put your questions in that form. Now, can you see that? Can you see that? Now this 12,000 is per year. Tapan, am I right? 12,000 or 1,20,000. 1,20,000 every year or it's lump sum? Tapan, it is every year or it's a lump sum? Every year you are investing 1,20,000 or lump sum? Tapan? Are you there? Every year, right? Okay, so every year, okay, every year. 1 lakh every year. Every year. That means 1,20,000 every year. So 1,20,000 is what? Tapan, 1,20,000 is what? 1,20,000 is what? 1,20,000 is what? In computer language, what it is? It is PMT. Yeah, awesome, guys. Yeah, it is PMT, right? So 1,20,000 minus, right? We are investing minus 1,20,000. Okay, then after that, every year for 18 years, NPER is 18, right? NPER is 18. Now, PV is not there. PV is 0. We need to find out future value. Now you'll have to give me rate. What is the rate? Rate you'll have to give me. What is the rate? Top up. Now, what is your confidence level? What rate you are going to get? What rate you will be getting? Tell me. So you must be like, okay, I am confident that I'll be getting this much of rate. Tapan, 12% rate. Tapan, 12%. It is 12%. Yeah, you can get it provided you have knowledge. Okay, so you will get much more clarity on Sunday. Do not miss the Sunday session. On Sunday, there are a lot of mis-selling happens in mutual fund also. A lot of wrong information is shared. Okay, by all the mutual fund houses or whoever to all the general public. Okay, there are a lot of misconceptions. There are a lot of misinformation. I am going to show you the truth. What is the truth in a mutual fund industry and what you need to understand. Everything I'm going to show you on Sunday. Do not miss it. Okay. So now, okay, fine. If it is 12% equal to FV, very simple, equal FV. Then after that, simple rate is 12%, comma, NPR is 18, comma, PMT is minus 1,20,000, PV is 0. PV is 0. Oh. Yeah, PV is 0. Okay. And then 1. Equal FV bracket close 12%, comma 18 minus 1,000 0, comma 1. Okay, so it will be how much? It will be 74,92,761 rupees 69 paisa. Okay. Understood? Tapan, this much it will be happen, provided you are sure that you will get 12% return. Understood? Tapan. Got it? Happy? Happy? Tapan, happy? Are you with me? Hey, I am alone or what? Okay. So now I am taking other questions. What are these other? Oh my God, so many questions. Oh my God. Okay, top on questions. Now, Negi, Git Negi. How can I increase my SIP amount in SBI mutual funds? SBI, you can SIP amount, you can like, you know, these are, you see, you can ask those guys. So these are these are some clerical administrative stuff. Git Negi, are you there with me? Sunday, Pranab, you will not get Sunday's recording. Okay, so that's we are very distinct, clear. Sundays we do not record because you'll have to be there. Okay. Yeah, Git Negi, you see, this is I do not know how to do, like, what are the apps, but you can increase it. That's what I can say. Right? How to do it, calculate, how to do it right now, I do not know. So it's a clerical thing. You can ask these guys. You can call them up and you can ask this, how can I do that? So what is the, because I don't know what apps you are using. What is the methodology? Because there are hundreds of apps, right? Okay, now SD. I want to invest in ELSS. I explored ET Money app. Some funds like Prayag have high ROI, but some funds like SDFC Tax Savings have low ROI. My question is, people will go for high ROI. Then is there any reason to buy low ROI plans? Why so many people are buying low ROI plans? SD, awesome question. SD, are you there with me? SD. SD. I think, okay, you are there, right? You see, so this is a big thing. It is not that ROI that is the only important thing. There are different types of mutual funds. Have you gone through, like, my the first booklet I gave you as a signing bonus? Have you gone through that booklet, how to choose right mutual fund using my matrix? So there is a matrix. Okay, no, you have not gone through. Okay, fine. Okay, please go through that. You will have an idea. Okay, that booklet is prepared for those who do not have knowledge about asset valuation. Somebody has knowledge about asset valuation, thing changes. That matrix is very, very preliminary. It's very, very first level. Okay, so then you need to go to next level. But before that, you need to understand one thing. There are different types of mutual funds. You know what are the different types of mutual funds? What are the different types of mutual funds? Main types of mutual funds based on investment. Do you know? There are equity mutual fund, there are debt mutual fund, there are money market mutual fund. Okay, these are the main types of mutual funds. There are other types also. We are not talking about that, okay, because it will be too long. Now, in equity mutual fund, there are index fund, large cap, mid cap, small cap. There are others also. If you understand this much, that's more than enough. There are debt mutual fund. Debt mutual funds are, there are long duration, mid duration, short duration, low duration, ultra short duration, money market mutual funds, overnight fund, liquid fund, ultra short duration funds, right? Now you see that you are asking a very good question. Now, like fruits, all fruits are good, but all fruits are not equally sweet. Some fruits are very sweet, some fruits are not very sweet. Does it mean that only the sweetest fruits are the best fruits, less sweet fruits are bad fruits? Is it like that? Yes, no? Got it? Exactly same way, depending on the season. Like mango is very good, but you cannot take mango in all the seasons. You need to understand at what season mango is best to eat, right? So this is your responsibility. So that's why all the fruits are there. It's your responsibility which fruit you should buy at what point of time. Similarly, as you have said correctly, all mutual funds are good. It's the ROI is not that only criteria. There is something else also. But for that, you need to have deeper knowledge. And let me tell you, if you want to have deeper knowledge, then you can join my next level course. Then you can have detailed knowledge, all detailed knowledge about mutual funds, and you will understand why all these mutual funds exist despite having lower rate, and why you need them too. Okay, And sometimes you do not need the best return mutual fund. Why? You will understand that. Okay, got it? This much, because when I say you'll have to give me around 8 hours minimum, bare minimum 8 to 10 hours. You'll have to give me to make you understand how to choose the right mutual fund for your purpose and at different point of time. You cannot stick to one mutual fund for your life. Understood? You'll understand this more on Sunday. Okay. Not really, SD, because I am pretty sure. So what is your qualification? Are you an MBA finance or CA or something? Do you have any finance background? SD, do you have finance background? Do you have finance knowledge? Software engineer. Now you see, so these are, okay, this is a very deep study. Until and unless, you see, to become an analyst, you need to have a finance background, plus you need to work as an assistant for around 2-3 years. Only after that you become a junior analyst. Okay, so they are called associates. Assistant means they are called associates, right? After that you become junior analyst. After that, after working as a junior analyst 2-3 years, you become analyst. After that you become senior analyst, then head of research. Okay, so it's a tough journey. Okay, doing sectoral study is not that easy. Don't believe in all these free knowledges. If you follow that, this is what is going to happen. With 4% return, 5% return, people are very happy. Okay, don't follow that. Okay, have proper knowledge. Right? Okay. Understood? Clear? Clear as the trading shares? And no, we do not discuss about. We do not discuss about shares and stocks. We discuss share market because we invest in equity mutual fund. Okay, that's why we discuss share market, but this is not in this level. This is in the next level. We discuss share market, we discuss valuation of share market because we invest in equity mutual fund. There are different kinds of mutual funds. All mutual funds are good, as SDS said. Okay, because different mutual funds are good at different point of time for different purpose. Okay, so now Rajashree Chakraborty, what is best safe risk-free investment option? FDs, Rajashree Chakraborty. It is FDs. Fixed deposits, bank fixed deposits are best risk-free deposit options. And again, if you have knowledge, you can also go for liquid funds. In case of liquid funds, you will get tax advantage. Okay, you will get tax advantage over FD if you go for liquid fund. It's called liquid fund. Chaitra Mangal, monthly budget for investment 10,000 rupees, 20 years. How to choose right mutual fund? Charitra Mangal, as I have told you, if you are really 10,000 you are investing, that means every year you are investing 1,20,000. Okay, on Sunday you are going to understand why it is important to have proper knowledge on mutual fund selection. Otherwise, this is what is happening, whatever we have calculated so far. Understood? So now, what is the best mutual fund, right mutual fund? As SD has already indicated it. And in that question, I have already answered it. All mutual funds are good. That's why they are there. There is no right mutual fund. Let me tell you. Okay. There is no right mutual fund. Right mutual fund keeps on changing with the valuation of assets, with the valuations of equity market and the valuations of debt market. Okay? As I have told you, mango is good, but you cannot eat mango all the time. Right? Similar way, orange is good, but you cannot eat orange all the time. Almost with all the fruits, it is like that. Right? So similar way, you cannot stick to one mutual fund and you can expect a superior return. I will show you the data on Sunday. Okay, those people who believe that you can stick to, you can just buy Nifty or any mutual fund and for your life, you can stick to it and you can earn a decent return. What happens actually, that you are going to see on Sunday. Got it? Okay. Ratish and Malhotra, how we can master this knowledge after completing course? Your suggestions, how can we make returns table in Excel as done by mutual funds on our own? Okay, you can do it, Ratish. You can very easily do it. And if you really want to master everything, you'll have to join my next level course. Very simple as that. Okay, so you will master mutual funds. You don't have to ask anybody. No students of mine ask anybody, hey, suggest a good mutual fund. They do not even ask me. Okay, so till the time they are in that position that they'll have to ask me what is the right mutual fund, that means they have not completed the course. Because anybody who completes my next level course, he will never ever ask anybody to suggest any mutual fund, and he will never ever ask anybody what is the return. Okay, so they know it. They know it already. Understood, Ratish? Okay, so this also you will be able to do. This for the second question you don't have to do. Have you gone through that level 2? Level 2, not level 2, level 3. Have you gone through level 3? Ratish, have you gone through level 3? Okay, so you have gone through level. If you have gone through level 3, you can this XIRR. Mutual funds normally they use XIRR method. You can do it yourself. You have understood it already. Okay, level 2 for second question you can this CPC is more than enough to answer your second question. Will you be able to do it, Ratish? It is there, right? Today also we have done these calculations. Same way, it's very simple. Give the dates, give the investments, maintain the diary. XIRR you can find out any point of time. And mutual funds use XIRR because in mutual fund what happens? Normally investments are not regular. Got it? What SIP is best in age 47 brand? DC. Same question you are asking. I think I have answered this question. Did you get the answer? DC. Mr. DC. Mr. DC. Are you there? I think he's not there. Okay, Sunil Chabra, are you there? Sunil Chabra. Sunil Chabra, not there. Okay, Tushar Kamble. Tushar Kamble, are you there? Tushar Kamble. Okay, you are there. Okay, Tushar Kamble, you are there. Okay. Okay. Now, as per IRA, it's 40%. How can they give return? This return. Yeah, Tushar Kamble, no, you are getting a. I have insurance where I have to pay 50,000 every year for 10 years. At the end, I will get 5 lakhs. As per IRR, it is 40,000. How can they give this return, or I am making a mistake? Yeah, there is most probably you are making a mistake, Tushar Kamble. Tushar, yeah, I think most probably you are making a mistake. Let me see. I think there are some other information. Is there any other information apart from this? Insurance where I have to pay 50,000 every year for 10 years, right? So here is the periods. Okay, let me calculate it out. There's a mistake. Yeah, what is the mistake? Tell me. Will you be able to calculate it out now? Now it is okay. That is not. Okay, it's not. How much it is? 5 lakhs you have got. So how much it is actually? Yeah, 5 lakhs. That's what you have given, right? 5 lakhs you have given. 5 lakhs you have given, right? So now here, I think for 10 years, I will get the 5 lakhs. You will get 5 lakhs after 10 years. After 10 years, you will get 5 lakhs. Plus some additional bonuses that I don't have the data. Okay, that data you need to have. But it is not, definitely it's not 40%. So now will you be able to do that? This bonus data you must have. Okay, you can get this data, you can after 10 years. Okay, so now, so this is very simple, right? So this is your, we do not do the IRR, we can do the rate also here. Rate, okay, sorry, NPER, PMT, PV, FV, oh, sorry, FV. Okay, since there is no gap period, right? There is no gap period, am I right? NPR is 10 years. PMT is, but with 50,000, I'm getting IRR too low. Yeah, if you are getting too low IRR, then that is the reality. Tushar, okay, that's what happens. Okay, that's what I told you guys. That's what I told you guys, that people really lose a lot of money. It's not your fault because you are too busy, or you are because people are not educated. Like, I strongly feel this, at least this level of knowledge, CPC level of knowledge should be provided at the college level before joining the workforce. Since it is not being done, so all the institutions, they take advantage of it. Very simple. They know people do not have knowledge. They do not have time, and they are not educated with the basic finance knowledge that should be, okay, that should have been educated. So they take advantage of it. As simple as that. 5 lakhs insurance cover till 10 years. Is it still bad? Now you see, Tushar, you will understand on Monday. Probably on Monday we'll cover that point. Okay. You should not mix. You should not mix. Your investment is separate. Your return is separate. Now, if I show you how much return you can make, so you will be surprised. Probably you will make huge return, not 5 lakhs with your knowledge. So your coverage should be separate. You should not mix. If you mix it, they will take advantage of it. And it becomes, they make it very lucrative. Okay, you are getting insurance also, you are getting return also. Ultimately, you are not getting anything properly. Neither you are getting return properly, nor you are getting coverage properly. Understood? How much coverage you are getting? 10 years. So PMT is, okay, so I think you can calculate it out. So how much coverage you are getting here? 50,000 rupees your PMT is how much? 50,000 rupees you are getting, right? Minus 50,000. 50,000 rupees, how much coverage you are getting? 5 lakhs cover. Now you see, 50,000 rupees you are paying with 5 lakhs rupees. How long your family will survive with 5 lakhs rupees? Tell me. 5 lakhs rupees, how long your family will survive? God forbid nothing happens, right? I pray God that nothing happens. Okay. But since you have taken this insurance, right? So that's why if you take term insurance, where you will not get any return, right? 50,000 rupees, you will get a huge coverage. For me, in fact, I also, like Sunday, I'll talk about myself. I also started my personal financial journey very late, despite being a finance professional. Okay. Despite that, I started my term insurance, etc., quite late, because I was completely bindas. Okay. Till I did that calculation, we'll share this story on Sunday. Every 20,000 rupees, I get 1 crore coverage. Okay. 40,000 rupees, I get 2 crores coverage. Now, if you are young, you will get much better coverage. Understood? Got it? So don't mix. And that's what happens. That's what happens in the industry. Since people are not educated enough, right? Financially educated enough, and people have lack of time, so they take advantage of it. Understood? So this is the reality too, sir. Now, if possible, get rid of it. If possible, get rid of it. How many installments you have given? Satyaras, can you put your questions in this form? Put your questions in this form, Satyaras. How many installments you have given? 2 installments you have given. Okay, so now you see there is a method. Okay, let me show you what is the method we use. Our next level students use this method. Okay, so I am showing you right now. Of course, I'm not going to explain the method, but I'm doing the calculations, right? In the next level, you will be able to understand yourself how to do this calculation. Okay, so your PV is 0. Okay, I'm doing this calculation. Future value is 5 lakhs. Okay, then after that, so suppose there is a bonus. Can you give me some lump sum? What is the bonus? Can you give me some figure? Tushar, can you give me some figure? Read. It is ridiculously low. Somewhere around 1 lakh. Okay, 6 lakhs. Okay, this is nothing. Okay, you just get rid of it. Okay, 6 lakhs. You're not getting anything. 3%, 4% you are getting. Okay, so now this is now after 10 years you will be getting 6 lakhs. Okay, so if you surrender, so I am taking another case. Okay, surrender case. If you surrender, how much you will get? You will get 0 or you will get something. If you surrender, how much will you get? Will you get anything? No. Okay, so let us assume it is 0. I'm showing you the calculator. Okay, need to check. Okay, so now you check it. Suppose if you get 0, means present value is 0. Okay, you are not getting anything. Now you are having 2 years, 10 years, 2 years gone, only 8 years left. Okay, PMT is same, minus 50,000. Now tell me, suppose you have knowledge now. Suppose you do not have knowledge, whatever existing knowledge you have, or you have knowledge, whatever, like you can decide. Tell me what is the return you can generate. What is the return you can generate comfortably? So like comfortably, I can return this much of generate. I can generate this much of return. Tushar, can you give me some figure? At least 8%. Okay, fine, at least 8%. Okay, so now we'll do the calculation. I am considering we are getting 0. If you get something, you can put it here. Okay, with minus sign. Okay, so now this is equal to FV. This is how we take the decision. Our next level students, that's how they take decision. Because most of my next level students, when they join my next level course, so they had like lot of garbages, and they clean up the garbages. So how to decide whether to continue with the garbage or clean up the garbage? This is how to take decision. Okay, this is how to take the decision. 8%, 8 minus 50,000. If there is something you are getting, you put it here with minus sign. Okay, because that way also we are going to invest. Okay, this one. No, there is no point. If you are getting 0, then there is no point there is no point discontinuing. You'll have to continue. It is better. Understood, Tushar? Because this is here you are getting 6 lakhs, you are getting 5,74,000. So there are 25,000 loss. So it is better you continue with this. Understood? Got it? So there is now you got stuck up. You got stuck up. Make sure from next time onwards you do not buy such kind of investment without calculating it. Okay? Clear? So now let me tell you something. If you make 12%, if you are sure that you can make 12% return, then you can forget 1 lakh rupees. Okay, you can forget 1 lakh rupees. But if it is 8% return, then there is no point, because this is less. You'll check the proper data. Yeah, I'm sharing this. You can do the calculation here itself. Okay, right? Suppose you have more knowledge, better knowledge, and you'll be able to get more than 8%, then you can put it here. Okay, so do that. You'll be able to do it. Okay, understood? Okay. Biplab, are you there? Sir, SIP calculator apps use which method of compounding, monthly or quarterly or yearly? SIP, I don't know. I don't know. It depends on, like, it varies. It cannot be like, one method. Biplab, get it? Like, the way we are calculating, you see apps, okay? I don't have any idea what they are calculating. I always use my spreadsheet because spreadsheet is the mother of everything. All the calculators are based in ultimately spreadsheet only. Spreadsheet is the mother. Okay? Understood? So this is the mother. Calculators are being prepared by somebody, right? So it depends, like, and it cannot be like, if you are paying monthly, if the SIP is monthly, it should be monthly. And if it is quarterly, it is quarterly. It's like that. Negi Git. Negi, are you there, Mr. Git? Git Negi. Git, are you there? Git, are you there? Nabeen, please put your questions in this form. Okay, Git is there. Git, you see, let me tell you, you are asking big questions. How to choose a SIP, where to invest, and which product to choose. Could you guide about some good products for SIP? Now, as I told you, now let me tell you one thing. So, does investing in gold is a good option for future? You see, gold, I have no opinion about gold. I do not invest in gold. Never ever invest in gold. Why? So, like, there is a big story. Why no? But personally, I have no opinion on gold. Where and how to buy bonds and which bonds to be bought, please guide. Now you see, these questions that you are asking, if I have to make you educated enough, you'll have to give me minimum 8 hours, bare minimum 8 hours, 8 to 10 hours. Very simple as that. Okay. So you'll have to join my next level course. You'll be able to understand all these questions. You'll be able to understand the answer, because it cannot be said in such a short period of time how to choose bonds. You should understand how to calculate a bond. Bond has a duration. You know that? Git. Bond has a duration, something called duration. You understand that? Bond has a coupon. Bond has a yield. Do you understand all these things? No, right? You see, you will have to understand everything. Only after that, you will be able to buy bond. Don't get trapped. I know why you are asking me. I know what advertisement you saw. I know that. Okay? Because I am from that industry. I am not somebody who has taken biryani for 30 years. After that, I have started preparing biryani. No. Okay? So I was working with a chef. Understood? I was somebody who designed IPO. I was somebody who designed how to sell the shares in the market. Right? It's not that I have been investing for 20 years. After that, I have started giving training. It's not like that. I was in the other side of the table. I was making people invest in crores and crores, hundreds of crores. Okay. Of course, I invested also myself as a fund manager. Okay. As a part of the management team. Understood? So now that's why. So you need to understand all these things. Don't get trapped. If you go with shallow knowledge to the market, you have seen it, what happens already. Okay. This is what happens, and you'll have more idea what happens. Right? You'll have more idea on Sunday. Understood? Git? Very simple. Because you see, like a simple rate of return, how many hours we have to spend just to understand how to calculate rate of return. Okay. So here you'll have to take like a lot of, okay, let me tell you, a lot of people, somebody also say, okay, I give diplomatic answer. I do not answer like, straight away, which mutual fund. I have already told you. Now let me tell you one thing. You go to a doctor and you tell her, your doctor, that I have got pain here. Okay. What she will tell you? Please do this, check, do this test, this test. And after that, you come to me. You do all this test and like you go with the report. She'll look at the report and she will tell you, okay, we will start this particular treatment. Probably it will be okay. Probably it will work. It should work. This is her words. This is her language. Now you speak to a quack. What is a quack? All these doctors who sits under the tent with big speakers. They are quacks. Call him up. Hey, I am having pain here. Come right now. No, I cannot go. Okay, send somebody. I'll send you a glass of water. Tomorrow in empty stomach, you have that water. You will not have any issue throughout your life after that. This is my guarantee. A quack can guarantee because he has not seen what is inside. A doctor cannot guarantee because she has seen what is inside. She knows, she understands how complex this stuff is. So she will never guarantee. Okay? Somebody who has knowledge, who has seen what happens actually that side of the table, he knows or she knows that it's not possible to just say, buy this mutual fund. It is not possible to say like that. Somebody who doesn't have knowledge, he can give you recommendation every single seconds. Got it? Don't get cheated. Somebody who gives recommendation like this, either he is a quack or he is trying to cheat you. Simple. Clear? Clear? Okay, just a moment. So that one by one I'll go, okay? Because everybody is in queue. S. Kumar. S. Kumar, are you there? How to invest rupees 5 lakh saved with me? S. Kumar, are you there? Mr. S. Kumar? Not there. Minish Shah. Minish Shah, are you there? Minish Shah. Okay, Minish Shah, are you there, right? Ashish Amle. Ashish, which one? S. Kumar. Which one? Ashish. Ashish, which one? This or Ashish Amle. Oh, I am so sorry. Okay, I am so sorry. Okay. Okay. I'm so sorry. I don't know. Okay, na? Ek karke remove, right? Okay, current is how much do I need to invest in ELSS with 12% for just 3 years only? Okay, Ashish Amle. Okay, this is a question that I need to calculate. Okay, Ashish Amle. So sorry, because you know, yeah. Okay, now Ashish Amle. Yeah, Ashish. I need to plan for retirement at 58. Current age is 34. Pretty young, man. Don't waste time. Okay, let me tell you, because you know you're pretty young, you have bright future. So for investment is concerned, how much do I need to invest in ELSS with 12% for just 3 years only? Okay, so this is a easy. This calculations will be complex, Ashish, because you know you'll have to do 2 levels of calculations. And let me tell you, so there will be like, you know, there are 2 steps, trial and error you'll have to do, lot of, okay? It will take too long and you will not understand at this level. Got it? So in case you join my next level course, so then you'll be able to do it yourself, or there, like, you know, I can show you how to do the calculation, because this will take long. Understood, Ashish? This is out of syllabus. Okay. If you continue, suppose I say not 3 years, if you say, okay, you invest for not 3 years, but for 58 to 34, like, you know, entirely for 24 years, then I can do it. Okay. But if you need to invest only for 3 years, then it is not within the syllabus, it is out of syllabus. So do you want me to calculate if you continuously from 34 years till 58 years? Means how much? 24 years. That's also works. Okay, fine. So then I am changing the question for, okay, for just 3 years only, that I am removing. Okay. I'm removing this part. Okay. Then I can calculate out. Then it is within the syllabus. Okay. Similar, like, same thing. Okay. It's very simple. Rate and PER is 5 elements. PMT. Sorry. PV, FV. So now rate is, you have set 12%. Okay. Now 12%. NPER is your 58 minus 54. Minus 34. 24 years. PMT, you'll have to calculate it out. PV is 0, no lump sum. Okay, retirement, how much money do you need? How much money? Ashish, how much money? Have you calculated it? How much money you will be needing for your retirement? Have you calculated, Ashish? Not calculated. Okay, so now you let me tell you one thing. If you have not calculated, Sunday you will get an idea. Okay, so you have 24 years. So I will show you the figure of 25 years. Okay, 25 years, and then I'll give you everything. Don't worry. So you'll be able to identify. Okay, I'll be needing this much of money for my retirement. Practical number I am going to show you on Sunday. Understood? Because this calculation is very, very complex. It's very complex. Okay, and most of the calculators, they take a easy route, which is a trap, big trap. Another cheating happens. Got it? So we'll discuss it on Sunday. Okay. Bhuvan Kumar, 5 crore FV. So you can put the 5 crores and you can find out the PMT. Very simple. Got it? Bhuvan Kumar. Okay, so you can just put the FV and you can find out. Now, S. Kumar, are you there? You see, if you have no idea where to invest, then invest in. If you have no idea where to invest, then invest in anywhere where you have proper knowledge. As simple as that. Okay. If you have no anywhere, like you can invest in fixed deposit where you know how much return you are going to get. Minesh Shah, how to calculate invest in existing mutual fund. Minesh Shah, are you there? Minesh, are you there? Okay, real me. Okay, you are there. How to calculate and invest in existing mutual fund. How to calculate the return, right? So you use, which method do you use? Tell me. Do you maintain a diary how you are investing? Do you maintain a diary? Okay, so you see, you will have to maintain a diary. If you have no data, then how will you calculate? You'll have to maintain a diary, right? When you are investing. If you want to start, then you tell me which mutual fund. Somebody tell me, you are investing in mutual fund SIP. Are you investing in SIP or you are investing in just like that? As you go ahead. As you go SIP, right? If you do invest in SIP, then how to calculate return? Tell me. Tell me, somebody. We have already discussed it, right? Yeah, you can use, you don't have to use XRR if you are doing SIP. If you are just going ahead as easy, right? Whenever, as it is, right? What is called, as you like. If you are going ahead as you like, then you maintain a diary, you can do XIRR. Otherwise, if you are doing SIP, you can use rate, you can use IRR, any matter. You'll get the same results. Understood? Minesh Shah. How to invest in SIP? How to invest in mutual fund? For that, you'll have to join my next level course. You will understand. Because as I'm telling you, again, today I'm just telling you. Sunday, I'm going to show you the figures. Okay? Then you will get convinced that actually nobody can suggest one mutual fund for your life. Nobody can suggest one mutual fund. You'll have to keep on changing. Okay? If I suggest one mutual fund, after 1 month, the situation will change and you may need to change the mutual fund. If you continue with the best, it could be the best mutual fund, 5-star mutual fund, right? But the situation will change, and if you do not change your holding, you will start making losses. Okay, this is the reality. And on Sunday, I'm going to show you, you will get convinced. Understood? Yeah. Do not trust anybody. If somebody suggests a mutual fund and tells you that you just continue for your life, okay? Do not trust. So he is either a fraud or he is a fool. That my uncle used to tell. If somebody talks nonsense, he used to say that guy is either a fool or a fraud. Always remember that. Arpit Rastogi, sir, whether recording will be provided? Yes, recording will be provided, Arpit. Okay. This recording, not Sunday. Sunday we do not record. Even if we record, in case like it is recorded, this is for our own purpose, not for you guys. Sunil, are you there? Sunil, are you there? Okay, Sunil Kumar, you are there. Already we have invested in mutual fund SIP. Agent says keep it for long term only, then it will pay. Can we switch from that mutual fund and SIP? You can switch. You can switch, and as I have already told you, you have already understood. From your question only, I can understand, right? So it is not true. It is true, but not always. When the situation changes, if you do not change, then you will get negative return. And I'll show you. On Sunday, I'll show you. Okay. Sunday, you will see it yourself. I'll show you. I'll show you the data, detailed data. Okay. I do not talk like just because somebody said. Okay. So that's why people were, I was in very much demand when I was an analyst, and really people were really, they didn't used to talk to me just like that, because whatever statement I make that statement only after crunching the number, doing the research myself. Myself means not always me, I have the team, so they do the research, but only based on research, based on number I talk. Okay, I can show you exact number. What is the loss happens? What is the profit happens? Okay, show you on Sunday. Don't worry. Sunil, got it? John Sapati, as I have told you, gold, I have no idea. Okay, I don't invest in gold because gold is a crazy product. Gold has no value. You know that, right? You'll not believe me if I tell you right there. That's why I don't talk. Those who have joined my next level, so they can understand it. You know that gold has no value. Do you know that or not? Sunil not. Who is asking? Jayant. Do you know that gold has no value? Do you know that? Gold is a useless product. The most useless metal is gold. You cannot use it anywhere. It has no economic value. Okay, so Bhuvan Kumar, are you there, Mr. Bhuvan Kumar? Okay, not many questions. Bhuvan Kumar, you are there. Okay, you are investing 99,036 per annum from 5 years for a term insurance of 1 crore. My current insurance, my current age is 33, and the term insurance is valid for till my 75 years. Okay, this is good, Bhuvan Kumar, but 99,000 for 1 crore. So did you check with other insurances? You see, you should have term insurance, but let me tell you, 99,000 you are paying for 1 crore. This looks slightly expensive because you are 33, 99,000 already. Like, I have a rider. What is that rider? You have 7 rider. What is that rider? What is that rider? Critical illness. You see, this is the mistake you do, right? Can you see that? Accidental, critical, and all. Accidental is all, anyway, it is covered. You see, for your accident, for your medical, so you need to take separate mediclaim or health insurance. They are two separate. Mediclaim is separate, health insurance is separate. You may need both, you may need only one. You need to have thorough knowledge about that. Okay, so we are not going to discuss these things at this level here today, because it will be a long discussion. Okay, so whenever you mix and match, and most of the time these guys will try to mix and match, because when mix and match happens, then calculation becomes difficult. And when the calculation becomes difficult, or calculation becomes sometimes impossible. Okay. So in that case, these guys can take advantage of that. Right. So for me, like, let me tell you, I have 20,000 rupees I am giving, and let me tell you, as I think I'm repeating again, I started my planning quite late. Okay. And that's why today I repent for that. Okay. I regret that I started it late. So even then, I pay 20,000 rupees every year, and my coverage is 1 crore for 1 crore. Okay. So earlier it was more. So now I have reduced it because my kids have grown up now. Really speaking, I do not need for another, after 2 years, I do not need any kind of insurance. Right? Even if nothing is going to happen to my family, they will be comfortable. Right? So that's why. So that's why, you see, this is how it is. And again, I have a separate medical. Okay. For 5 lakhs, this is a basic plan, 5 lakhs, basic plan, I am paying 23,000. And I am 52. Getting it? So that's why, do not mix and match. These things happens. When there's a mix and match, then yeah, things go wrong. I am paying only for 5 years. Okay, if you are paying only for 5 years, I think that is fine. 5 years means 5 lakhs rupees. Okay. Yeah, 5 lakhs is fine. Okay, I am paying every year 22,000. I think, and I don't know. I think, my policy is up to 65 years or so. Okay. So then it's fine, most probably. Got it? But still, you first thing you always remember: do not mix and match. Do not try to mix the things. Keep them separate. Okay. So that there's a clarity. Understood? Check it with other products also. What is the weighted average annualized return? Kenny Thomas. Okay. You see, these are all cheating returns. I have no idea. Right? Weighted average annualized return, all these returns, okay, never get, like, these are all only scientific returns. We have only 4 kind of scientific returns: rate, IRR, XIRR, and the manual method manually. Okay. These are the only 4 scientific methods. All methods, they're used to cheat people. Let me tell you very bluntly. Understood? Don't go for all these things. There are hundreds of methods. They can, whatever looks attractive, they calculate it out and they start promoting them. You cannot compare. Now, all these things, as we have done it, you will get the same results. Whether you are using a rate, you are using XIRR, you are using manual method, right? You are using IRR, you will get the same results. But with this, you cannot get the same results. Understood? Okay. So I have no idea what they are talking until and unless I see the methodology. And again, even after seeing the methodology, I know this is nonsense. Biplab, are you there? Please guide how to calculate top-up SIP. Okay. Biplab. Okay. It looks like somebody referred you my course, or you are doing it for the second, third time or something like that. Somebody referred you my course, or somebody, okay, you are doing it second, third time. Once you are repeating it, are you repeating it? Or somebody referred you, somebody talked about my course. First time reference. Okay. So yeah, okay, I know that, right? From your question only, I know that it's a reference. Okay. Sunday you will understand it. Okay. Because it's a long discussion. On Sunday you will understand it. Got it? Viplav? Please don't miss on Sunday. Prabhu Raja. Are you there? Okay. Yes, sir. One insurance scheme I was attracted to, monthly cash flow, 10,000 rupees monthly intervals. Okay, every month. For 15 years, I receive pension from 16 to 30 years, 1,20,000 per year. After I quit the pension, I will get 1 crore. Is the right investment or not? Okay, fine. Okay, let me calculate it out again. Right now, we do not know whether it is right or wrong. So only after calculations we'll come to know. Okay, Prabhu Raja. Okay. One insurance scheme I was attached to, monthly cash flow 10,000 rupees, monthly intervals. Okay, for 15 years, I received pension from 16 to 13 years. Okay, so we'll have to do the timeline. Okay, because there are gaps. All right. So periods, monthly, right? Month. And here cash flows. Okay, 0, 1, 2, करके I received pension from 16 to 13 years, right? So for 15 years, then another 15. So 30, 16 to 30 years. Means 35. Hmm? 30 years. Okay. So here, how much you are paying? Monthly cash flow. Oh, it is monthly, right? Okay, so then how much it will be monthly means 30 years, 30 into 12. How much? Oh my God, it is huge. 360. Okay, this month, right? 360. $360 months. And monthly 10,000 rupees for 15 years. 15 means 15 into 12. How much? 15 into 12. 180. So minus 10,000 till 180. Okay. Till 180. Understood? Okay, for 15 years, then I receive pension from 16 to 13 years. 16 to 13 years means 16th year. 16 years means there will be 000 for 1 year, I think, right? 16 means is equal to 16 into 12. Another 12, right? So 192. So normally there is one gap here, okay, normally. Okay, from here onwards, you'll be getting no gap. Are you sure? So that means then it will from 180 years. You see, when you are paying, like then you are saying from 16th year. So then it will be from 15th years. So you are going to get from 15th years or 16th years. If it is 16 years, then it is 191 from here. If it is 15 years, then from 181. 16th is here, no? 16th years means 192. Please check. Normally, it is like that. 99% of time, it is like this. If it is 16, then it is 192 months. Am I right or not? Am I right? 16 means 192 months. Okay. Or you'll have to pay till 191 months. Tell me, which one is correct? Because you are starting from today, right? You are starting from today. Most of the time, they return only at the pay till 191. Okay, fine, fine. If you pay till 191, okay, that's fine. Okay. Okay. Then after that, from here, you are getting, for 15 years, I received pension from 16 to 13 years, 1,20,000 per year. So you are not getting every month, but you are getting every year. Am I right, Prabhu Raja? Am I right? You're not getting every month, but you are getting every year. Okay. So 1 lakh plus 1,20,000. So on 92nd year, you will get 1,20,000. Am I right? So here, 192nd month, you will be getting 1,20,000. This cash flow is okay. Plus 1,20,000 here you will get. No, I am not getting you. So from here itself, you will be getting, you are paying up to 191 months. Okay. And when you will start getting 16th year means 192 months. Am I right? 16 year means 16 into 12 means 192 months. Okay, yeah. Okay, fine. Okay, so now then there will be 0, 0, 0. Okay, 0, 0, 0, 0. So for 12 means 192 plus 12 is equal to this plus 12 means 204. Again 204, you will get another 120, 1,20,000. Because till here it is 0. Just copy them. Yeah, everywhere getting it. Yes. Okay. So now 1 crore, where should I put 1 crore? 360 here, should I put 1 crore plus 1 crore? Prabhu Raja, can I keep plus 1 crore here? 1,20,000 plus 1 crore. Okay. So is equal to 1,20,000 plus 1 crore. Okay, plus 1. Okay, 1 crore. Okay, that's it. Why? So it's very simple. Now we know what to do. What we will do? Now tell me what we will do. What we should do now? What we should do now? IRR. Okay, yeah, beautiful. Now you see sometimes what happens when there is a huge number like this, so you may not get, you may get error. Okay, so then I'll tell you what to do. So most probably here you'll get error because there are so many numbers. Okay, so you'll get this number NUM. So when you get this NUM, so don't get panic. What you do, you just, now why you get NUM, let me tell you why you get NUM, because there is a iteration process goes behind the calculator, right? It goes behind the computer. Now what happens, so IRR calculation is actually very complex, right? So when they cannot find out the answer, they give NUM number. So now you need to help them, help the computer, not them, help the computer by giving a 1%. That means you are giving an indication that, hey, look around 1%. Okay, so then what will do, they will start, the computer will start looking for 1% plus, 1% minus, like that. Okay, around 1% it will start calculating. Okay, otherwise what happens, like, it goes like, minus 300% plus 400% or something like that. Okay, whatever is their algorithm. So now you need to give a guess. So I'm giving a guess 1%. Okay, at the end I'm giving a 1% guess, and you give, then you will see this is the return. Now 0.71% per 0.17% is per month. Okay, so per annum it will be 0.71% into 12. So 8.53% per year. Understood? Clear? So if you are happy with this, you can go ahead, and if it is guaranteed 8.53%, not bad if it is guaranteed. Is it guaranteed? Is it guaranteed? Okay, if it is guaranteed, 8.53% is not bad. If it is guaranteed. LIC, okay, make sure this 1 crore is guaranteed. Okay. Make sure the 1 crore is, there is no if but else. Right? So there is no fine print. If there is no fine print and this is like this, then it is not bad. But make sure of that, because they do. Yep. Okay. Now, Mr. Pranav Hathi, are you there, Mr. Pranav Hathi? Jivan Umang. Okay, probably I don't know. Yes, from Vadodara, Pranav Hathi. That is, sir, if I want to make rupees 5 crores for my retirement funds by investing 15,000 per month regular, then which mutual fund do you suggest? At what rate? I have already answered this, Pranav. Did I answer this? Similar question. You got it? Why? So if somebody suggests you one mutual fund and it tells you that please use this mutual fund and you continue, right? So then you are depending on luck. Okay? Because you need to have knowledge to get good return, such that you can keep on switching based on the market situation. Then only you can get, you can with a quite a certainty, quite a great degree of certainty, you can get a good return. Otherwise, it depends on luck. Okay, I'll show you the numbers on Sunday. Understood? And also I will give you how much retirement money. I want to make 5 crores of my retirement, 15,000. I'll also give you, I'll not be able to suggest mutual fund, right? But I'll also show you if you can manage to get 12% return, right? So how you need to invest. Okay, so I am also going to give you a technique which is called stepped up annuity. Biplav has already asked because somebody referred it. So he has come through reference, so he has some idea. Okay, so I am also going to discuss that method. Okay, that's a magical method. Okay, so I am going to show you. Your investment requirement comes down drastically. Got it? So that I'll show on Sunday. Sunday, do not miss, and please join on time. Otherwise, what will happen? You will not understand. If you become late, then you will not understand what is being discussed later. Ratish, if we increase our SIP by 5% per annum, starting from 10,000, how to make table? Ratish is there? Ratish, very, very active. Okay, I know. Okay, again, same thing. It's a step up. We will discuss step up on Sunday. And let me tell you, if you want to make this table, you will not be able to make this table because this is a very complex calculation. Okay, and so only way to make this table is to join my next level course. I'm so sorry. Okay, how to calculate FV in PPF as rate keep on changing every year? Okay, beautiful question. Now in this case, you'll have to take an average. Understood? Or what we'll have to do, every time it changes, you'll have to start new from there. Understood? Suppose what we'll have to do, suppose after 3 years it changes. Till 3 years you do one calculation, find out how much money you have made using FV. Understood this first step? Okay, suppose for 5 years there is one rate. Okay, 5 years you use that same rate and find out FV. Okay, so now this FV will be PV. Clear? Now this FV will be PV and your PMT will remain. Okay, that way you'll have to go ahead. That is the only way. So you'll have to break it. You cannot do, or if you want to do a one calculation, then you'll have to do a assumption that on an average it will be this much. So you may not get that exact data, but you will get very near there. Understood? Clear? Okay. So do it, try to do it, you'll be able to do it. I know, because you are smart. You'll be able to do it. Naveen Mujani. Okay. Naveen Murjani, are you there? Naveen? Okay. Premium is 8,235 started on this to this 28069275 and maturity amount will be still like please keep the rate of interest. Okay, it's very simple. You will be able to do. Will you be able to do it? Naveen Murjani? Or I'll have to calculate it out. Will you be able to do it? Will be able to do it yourself or you want me to do that? Okay, you have just typed yes, I cannot make out. You'll be able to calculate it yourself. This is premium is 8,235 monthly or annually? It's monthly or annually? Naveen? Annually is not there. Got disconnected or something. Okay, as he comes, when he comes, then now we'll discuss it. Satyaraj, are you there? Satyaraj. Okay, okay, Satyaraj. Okay, just a moment. 12-year, 10,000 every year, started in 2017, already paid for 5 years. 13 to 17 years, 40,000 per year I shall get. Okay, fine. 18 years, 2.5 lakhs. 2.5 lakhs you are getting or you are paying. 18 years, 2.5 lakhs plus or minus. Satyaraj, you are getting it or you are paying it? You are getting it, I believe, right? Post 12 years. Yeah, you are only getting. Okay, fine. This also you are getting 20th year, 18 lakhs you are getting. Okay. Now after total sum assured 22.5 lakhs. This you are getting at what time? 22.5 lakhs you are getting. 40,000 also getting. Okay, 40,000, 13 to 17, 14,000 5 years. Okay, 12 years vary every year. Start into 7. Okay, fine. This sum assured, total sum assured you will get which year? This sum assured you will get which year? 20 years. Okay, under 20 years. Okay, plus 20 years. Okay, 20 years. Already 5 lakhs for last 5 years. What to do? Okay, just a moment. Now this is again question, right? First, let us see whether it is good or not. Okay, so if it is good, then we'll continue. If it is bad, then we'll have to do the stress test. Okay, stress test means your investment stops. Okay, if your investment stops, then yeah, if your investment stops, even then we need to take a decision. Because you know how to take that decision. So I'll show you how, I'll tell you how to take the decision. Then after that, you know, you can decide. Satyaraj, okay, yes. Okay. Now, every year started in 2017, already paid 5 years. So your investment has stopped means 12 years. 1 lakh, 10 lakhs, 1 lakh 3,750. Okay. So now here is the periods, years, and here is the cash flows. Yeah. If I dissolve, we'll get 80% back now only. Okay, fine. Don't worry. We'll see that. Okay, so you know it, right? If you done 80%, you will get. Okay, fine. That's fine. Okay, so that's a good information. So we can use it for 20 years, right? For 20 years. So now we'll do one thing. We'll make 2 columns, 3 columns. We'll make one cash inflows, and then we'll make cash outflows. This is cash outflows. This is cash inflows and this is net cash flow. Okay. So cash outflows are 103,750 minus 103,750. Okay, minus 103,750. This you are making for every year for 12 years, right? Already paid 5 years. Okay, fine. Okay, for 12 years. First, let us do that calculation. Then still here. Then this 12 years. Starting from 0, then it's 12 years. Okay. Then after that, there is no investment. From 13th years onwards. Okay, normally from 13 years onwards, 13 to 17 years, 14,000 per year plus 40,000. 40,000 per year from 13 to 17. Okay. So there is a one gap here. Okay, then after that, 18th years, 2.5 lakhs. 2,50,000. 2,50,000. Then 0. Then 20 years, 18 lakhs. 18 lakhs plus 22.5 lakhs. Am I right? Satyaraz, it is 18 lakhs plus 22.5 lakhs. Is it like that? $18 lakhs only. Okay, 18 lakhs only. Only 18 lakhs. Okay, okay, 18 lakhs. 18 lakhs. Okay. So this much, that's it, right? That is the cash flows. That's it, right? The cash flow is correct. Total 222.7. Okay, got it. Okay, got it. So now total is this much. Okay, now net cash flow is minus this plus this. This is the net cash flow. Okay, so now on the net cash flow, we'll have to do the IRR. Okay, it's yeah, it's very 4.31%. Okay, so this is how it is, right? So now you want to continue or you want to see if you stop how much you will get. You want to stop it or you want to continue? First, let us take a decision. After that, we'll see whether it is worth stopping it or not. So 4.31 is okay or it's not okay. I think you should stop, right? And if you stop, then what you will get? First thing is that, and now we'll see if you stop, then, okay, now if you stop, okay, if stop, how much you are going to get? Already 5 installments you have given, right? 1, 2, 3, 4, 5. This 5 installments given. You will get 4 lakhs. 4 lakhs you will get, right? So it will be 4 lakhs you will be getting. 4 lakhs you will be getting, right? Minus 4 lakhs. This 4 lakhs you will be getting, that you will invest, and also you will be investing this 1,03,750, right? Let me do that calculation. Okay, so now this will be slightly complex calculation because okay, this will have to do a separate calculation. Okay, fine. Okay, that's fine. So now we will do. So this as they have made these things complex slightly because knowingly, so they do this hanky panky such that people do not calculate it easily. Calculation becomes difficult, but still we'll have a rough idea. Now tell me what is the return then you can expect. If I give you this much of money, 4 lakhs I will give you, okay, because you have already forgotten it, and then 1,03,000, 10% return. Okay, if it is a 10% return, you can do this 10%, 8%, you can do that simulation. Okay, so if it is a 10%, then let me tell you how much it will be after at the end of 12. Okay, just a moment. It will be slightly complex, so but still I'll try to do it. Okay. 4 lakhs you are going to get, right? So what I'll do, I'll make it 2 part. 103. Okay. So let me find out future value. It is 10%. It is 12. EMT is minus 1,000 minus 3,000. Okay, so it will be 40 lakhs 21,000. You're getting 40 lakhs 21,000. So it is almost double. Okay, so that you will get at the end of 12 years. Understood? Satyaraz. Okay. Okay, so this much. Now, if you want to see, now you can see 40 lakhs 20,000, 21,000 you will get if you can invest at 10%. This same amount, this 4 lakhs rupees you are getting, and you are investing 1,03,000, 1,03,000. 1,03,750, and the 4 lakhs rupees you are getting from them. So this entire amount, if you invest, you will get 40 lakhs rupees. So now, how much you are getting here? You are getting here 22.5 lakhs, right? You are getting here 22.5 lakhs. Yeah, 22.5 lakhs, right? So here you will be getting 40 lakhs. Now, I think, you should stop, right? Or not? What do you think? If you stop it, then after 12 years, you'll be making 40 lakhs. And after 20 years, if you want to find out after 20 years, how much it will be, that also I can give you. But I'm giving you after 12 years and after 20 years. After 20 years, it will be how much? 10%. And then your 12 into 20, 12 minus 20 minus 12, 8 years. And then here is PMT is 0. TV is this much, 4,10,000. Okay. Yes. 86 lakhs. Am I right? Just a moment. 10%, 8, PMT is 0, 40 lakhs 21,000. Okay. And then after that, 1. Okay. Yeah. 86 lakhs. Right? Satya. Makes sense. When you say knowledge is how powerful it is. Now you can imagine, had you joined this course 5 years back, right? Probably you could have made 1 crore here. Not 86 lakhs, right? Not 86 lakhs, probably it would have been 1 crore. I don't know. You can do the calculation, right? You send me some money. Okay. Satya, I think you should send me some money. Okay. Okay, Biplav, again Biplav. Biplav, are you there? Still there? Is a good option, please guide. Biplav, are you there? Still there? Okay, Biplav. Okay, awesome. Okay, you guys have a lot of energies. One-time payment premium, 1,55,000 for 55 lakhs coverage. Up to 61 years. Yeah, this is not bad, in fact. So 1,55,000 one payment. Okay, current age is 34. That's not bad. So even if I do a rough calculation, so 34 up to 60 means 30. कितना आ गया 1,55,000. Of course, this is not the correct this thing, but this is not the correct way of calculation for a finance guy. But still, 5,100 on an average, right? So yeah, this is not bad. Okay, just a moment. Let me do some more scientific. Okay, let me put it there because then I am going to find out what is the equivalent. Okay, so that's what I'll do. You see, let me tell you, this calculation is slightly complex. You may not understand it, right? So, but still, I'll do the calculations for you, but do not try to understand. If you understand the calculation, that's fine. But if you do not understand, please do not ask me, because I'll not be able to answer in such a short period of time. Okay, but I'll do the calculation. One-time payment premium 1,55,000. Okay, so this is okay, rate. Yeah, so NP here. Let me see if I can calculate it out. Okay, so you are giving 1,55,000 for 55 lakhs over up to 61 years. 34 minus 61. Okay, so is equal to 34 minus 61. 61 minus 34 for 27 years. Okay, PV is present value is 1,55,000. Okay, 1,50,000. So minus 1,55,000. Zero. %. Okay, so this is equivalent to Biplab. I am giving you an equivalent, right? So this is equivalent to annual 11,000. This is equivalent to, okay, this is annual equivalent. Okay, so that means paying 1,55,000 today is equivalent to paying 11,068 rupees every year. Understood? So now you can compare. Okay, if some another scheme is saying, or you can make it, okay, 6%. Okay, you can make it, just a moment, make it 5.5% to be safer side. So you can say, yeah, 10,000 or 11,000. Yeah, I think 11,000. Now, how you compare? Now you compare with other offers that is giving you, say, if somebody is giving you, no, you give 8,000 rupees and you will get similar cover. So that is cheaper. Understood? So now this is the annual equivalent. So now annual. Okay, so kya bataya maine, kya annual equivalent. Got it? Okay, now you take a decision. Now see the market, see here and there how it is. Okay, so all these calculations you will be able to understand. If you join my next level course, you will be able to understand how to do, like, you know, it's, but basic is 5. That's why now I have, you see, I have given you the basics. The basic, this 5, like, you know, everywhere you see I am using this only. Rate, NPR, PMT, PVFB. इसी को तोड़ मोड़ के इधर उधर करके, like, you know, you'll have to calculate it out. That's how you need to do. But basic is 5. So basic, if basic is strong, then rest of the things you can understand. Durgesh, are you there? Mr. Durgesh, are you there? Okay, you are still there. Okay, that's awesome. Yeah. Okay, sir, how can we increase any investment by 10% per year or vice versa in any investment? You see, this is for that. You'll have to give every year. You will have to renew your instruction. Okay, suppose an SIP, what you'll have to do, you can increase that amount. 1 year gone, you'll have to do that increment. And now let me tell you, after I started this course, 2 years back. Okay, Recently, I have seen means my students who have joined my next level course. Okay, this is my next level course is a lifetime association, right? So here, and we have a big group. So in that group, all the students are there and they keep on informing. One students only informed me that there are some apps they have recently started that step up method. Step up method means you can instruct them beforehand. This is the SIP. Every year you increase it by 10% or 5%. I am also sure, Durgesh, you came through some reference or something. Durgesh, did you come through reference or you are repeating this CPC? Did you come through reference? YouTube. Okay, YouTube. Okay, fine. Fine. Okay, from YouTube. Okay. So now again, we will discuss it more. The step up we'll discuss more on the calculation part. We'll discuss more on Sunday. Okay. But so far this is concerned, increase is concerned. So you'll have to do it manually every year. And if your app, if they have that facility, so you can use that. Okay. So earlier this concept was not, earlier they used to call it top up. But top up was very random. There is no plan, right? So now on Sunday, you will see that you can plan it out. If it is a 10%, how much it will be, 5%, how much it will be, everything can be planned out. Earlier, it was like, okay, random. Okay, you top up. You get some increment, you top up. Okay, so this doesn't work. So you must have concrete function such that or formula such that you can calculate it out exactly. Okay. So Sunday, what timing and duration? Please let us know. Pranav, Hati, it will be Sunday will be at 10:30, and it will be 3 hours. In between, we'll take a break. Half an hour will break. Okay, and it is going to be awesome. Right? Today is awesome. Paisa vasool or not? Only 29 are there. Is it paisa vasool or not? Please let us know course fee for the next level course. Yeah, Jan Sapati, we will discuss it on Sunday. Okay, and don't worry, it will be compared to whatever you can save over your lifetime, it will be much less than that, right? But be prepared. Okay, so yeah, 10:30 paisa vasool, like that's an eye opener. Yeah, I know that. Okay, thank you so much. Thank you so much for your nice words. Now you can imagine, had you joined this course 5 years back, 10 years back, I don't know your age, right? As soon as you join the workforce, just before, had you got this knowledge just before that, how would have become? Okay, there will be a huge change in your financial in your financial well-being. Let me tell you, nowadays a lot of people think like, only doing business you can make a huge lot of money. Okay, that's not true. May not be true, right? Even if you know how to invest scientifically, even with a job also, you can have a beautiful, decent life even after retirement, right? But sometimes what happens? No, with job, like, you cannot do that. Only with, like, with business, you can make a lot of money. So where making money is concerned, if it's a passion, that's a different story. But if you're making money is concerned, even with your job, if you do scientific planning and calculations, you can make a decent amount of money. Okay, I'll show you more on Sunday. All right, better late than never. Yes, morning 10:30. Yes, morning 10:30. Yeah, Jan Satpati, you are of my age, right? Okay, let me tell you, you are saying you are 52. So there is just this Thursday. So we meet every Wednesday. Now it will be Thursday from this next week onwards. Next week, then after that, next week onwards, we will be meeting every Thursday. Now it is Wednesday. So every Wednesday we meet. Okay, one guy, he's 55 years age. Just last Thursday we did that calculation. Okay, so 55 years age, next level, he's the next level student, right? So just last week he joined, and he did that calculation. So he was stressed, like, putting so many things for his retirement. So he was almost like, he will not be able to have a good life after retirement, because so that was his stress. So he joined that and joined the course, and we did that all his calculations. Because not next, okay, he last month he joined, because he did workshop and everything, and then we did that calculation. So he was so happy Okay, and it happens many times, right? With many students, right? So he found that actually he can very comfortably resign that day only, right? So this one gentleman who was so much of stress since so long, he told me, since so long I was stressed that how should I spend my post-retirement life, because it's very nearing retirement. Okay, so we did that calculations and everything, and he found that that day he can resign and he can live a king's life. Okay, so this is what happens. Right? Okay. Yeah, you'll have to have knowledge, right? So this is knowledge is the king. KNOL is knowledge is the king. You have the knowledge. If you have the knowledge, you can really do a lot of things. It's easy. Biplab, we'll see this on, it will be less than 20,000 rupees. Let me tell you this much. But it is like no surprise. Okay. It will be less than 20,000 rupees. Keep your money, because you'll get a huge discount. And this discount, okay, we are very particular about those who have come through reference. Probably you know, we are very particular about who comes inside, right? So we don't follow up. We never going to make any call, right? So only serious people comes in, and only those people we give a window during that point of time, whoever joins. Okay, and we give a deep discount. Right, there is a bond also called deep discount bond. Okay, you will understand everything. Okay, so we give deep discount only at that point of time, but for others, like there is prices slightly higher side. Okay, but those who come through that master class, we give a beautiful discount. Okay, so yeah, so make sure you're ready with your cards and everything, just such that you can join immediately to avail that discount. Okay. Sunday timing 10:30. Do not come on time, right? So if you come late, you may find it difficult. Kya ho raha hai, samajh mein nahi aa raha hai, right? This happens. So please join on time. Start on time, 5 minutes before. Keep it on. 10:30. Okay. Bye bye. See you on Sunday, and you'll get a recording today or tomorrow. Tomorrow it is already 11:18. Processing will take time. Probably tomorrow you will get this recording, as well as the link to join my Facebook group. Good night. Don't get cheated. Okay. Okay. Thank you. Thank you. Good night. Good night.